congratulations on your earnings beat estimate, producing more oil than expected. I want to ask you about your reduced debt ratio. It's now below 20%. Is now a time to start possibly buybacks?
Well, first of all, good morning. It's good to be with you this morning. So it's a strong set of numbers, consistent across all parts of our business. So we're very happy with that. And as you say, cash generation has been also strong, $6.5 billion in operating cash coming in, and that has given us a reduction in the net debt ratio. So our priority is still the cash dividend. We raised that by 13% in the fourth quarter, maintained that for this quarter, and that is due to the improvements that we have seen and our capacity to maintain those improvements. And then it's still a priority for us to reduce our debt level to even lower levels. And still we are able to invest in a growing production, 3% production growth into the mid-20s, and also to increase our renewables portfolio. So we're very comfortable.
When do you think you'll be able to possibly start buybacks, though?
As I said, the priority for us is the cash dividend. We raised the cash dividend to what we believe is a competitive level, and we want to, reduce debt ratio going forward. Buybacks is an integrated part of our dividend policy, so it's something that at some point might be relevant, but for the time being, our priorities are, as I said.
I want to ask you about what's going on in the United States with Anadarko in play and Chevron flashing its intention to grow in the Permian. Does it put pressure on you and, say, others to make strategic moves and participate in this type of consolidation?
Well, first of all, this, opportunities out there, inorganic opportunities, something we always look for. And that also includes the onshore and the unconventional. So we have a strong position within the onshore. We produce more than 300,000 barrels a day from the U.S. onshore, and we will continue to produce at a high attractive level on the U.S. onshore. Permian is a very heated place to be, where entry tickets are pretty high. So it's not relevant for us to consider any entry into the Permian for the time being.
Yeah, you have said before that you consider the Permian too expensive. Does this potential deal reinforce that option? You still think the Permian is a too expensive place?
Yeah, I think this deal, it's a lot more than the Permian, right? But I think it is, I think that doesn't make any change to the sentiment and what we see, that, the entry into the Permian is still, a high cost, and it's attractive. Geology is attractive, but, it has to be meaningful in terms of entry and the potential for value creation. And as we see it now, it is not sort of what we're looking for.
I want to ask you about some of the politics developing in Norway. I was there recently when the Sovereign Wealth Fund was divesting away from oil companies. I know that has no bearing on Equinor, but there is this political debate about oil in Norway. We recently saw the Labour Party decide it'll no longer push for exploration offshore on the Lofton Islands. Rystad Energy says Norway is no longer the world's most stable oil regime. How worried are you about this?
No, there's really a broad political support for the oil and gas industry in Norway. I think that is really important when it comes to some of the discussions. Obviously, there are different views on oil and gas as such and the longevity of that. But this specific discussion was much related to very sensitive areas and views on the ability for the industry to operate in that kind of sensitive areas. And we think, this should be worked on and studied and get more facts on this. But there's been, an intense political debate on these sensitivities and how we as an industry can cope with that. So I think it's important to separate the discussions a little bit. This is about, sensitive areas. And then there is, another discussion which goes more into climate change and low carbon future and the role of oil and gas in that. And I guess we see the same discussions in Norway on that as we see in many other places.
I want to finally just quickly ask you about the price of oil. We have, disruptions in Venezuela, Libya, sanctions on Iran, contaminated oil from Russia. Yet we're seeing muted prices. Why are we not seeing Brent in the 90s or the $100 a barrel?
I think we see a pretty stable growth in oil demand, 1.3, 1.4. Then you have the political components that sort of tightens the market, and then there is OPEC, and they will look into their positions in June, and I think they will in one way or the other seek to balance the market. So we think there is room for high oil prices, and that's into our projections, but it's not in the short term. That's more in the medium term, and that could be driven by the fact that we still haven't seen the impact from the low investment levels that we have been through the downturn. Time lags in developing these conventional projects, and we still haven't seen the impact of that. So we think there could be a tighter market down the road, but for now we see volatility around the current levels.